Good morning. Hope you're all guys doing good. Today I'm back here with another YouTube video, and I'm going to be talking about sniper entries and how I normally get entries on the market. It's the Wiz Trader. Don't forget to like, subscribe to my YouTube channel, and let's dive into the video. So I'm going to be starting with the first example, and that's going to be the Euro US dollar. So I want to show you how I get entries on the market. So stick around with me how I normally get these entries, and maybe you can as well practice a bit and see where you can get yourself to in the space of trading. So at this moment, I'm just trying to just scale down a bit to 2019. Actually, it's where we're going to be starting from, and then yeah, we try to learn a 102 thing from from how I actually get entries on the market. So as you can see, this is our chart, and this was 2019. So we're going to be walking through the Euro US dollar, specifically the 4-hour time frame, and then I show you how I get these entries on the market. Yeah, so at this point you can simply see that the market came around here. So let me first get this. Simply see the market dived from this side, from creating series of lower lows and lower highs, lower lows and lower highs. Stage lower lows and lower highs until it landed around here. So upon landing, then it pushed a bit, after creating these beautiful trees around. Then it pushed here, and then it came around here. So as you can see, these are candlestick formations actually that it created. So it kind of created some kind of rejections around here. You can simply see tweezer, and then creating some kind of dodges, and then it pulled, created some sort of shooting star, but still on our support level. So that is not normally so effective. Yeah, it normally works on the resistance level. So then it finally gave us some candles around here. So what do we do as traders? So what I'm going to be doing then, I'm going to be plotting around here. That is something that I would have done. Okay, then upon plotting, then you can simply see that I can simply come, get this position and then put my stop loss below the range, and anticipate that the market is going to be pushing to the upside. And then from there, then you can simply see that the market, pushed from this point. It pushed from this point to this point. What does that mean for us traders? So remember, like, you need to always look at the left side of the chart before thinking about anything else. Then looking on the left side of the chart, then that means I'm going to be plotting my resistance level. So what happens with our resistance level once plotted? So we observe, what candles are going to be forming around the resistance level. So you can simply see that there is, some sort of a reaction. One, then the second reaction, then the third reaction. What does that mean for us traders? It could mean the third touch rule. Okay, it could mean the third touch rule around here. But still, since this market, left a trace around here, then we can simply use this and interpret that our market is going to be pushing down using these beautiful candlesticks. So you can simply say that give us, tweezers around here. Okay, then we expect this market to possibly move to the downside. Well, like, this is an anticipation market. Yeah, we're not always sure, but we just use patterns in order for us to anticipate that the market could possibly be heading to the downside. And then this could be our exit point around here. This could be our exit point around here because the market had already established support level around here. And then remember, at this moment the market was totally pushing to the downside. Okay, so what happens for us here? You can simply come again and look for where the market had created a level, and this is the level. So you come here, okay, you plot around here, then the market came, pushed to the downside, pushed to the downside, and then it came for a retest, and then gave us this move. So how can how can I get this move? Basically in this manner, I normally use what we call, I normally just get an intraday, rather scale down to lower time frame, and then get an entry around here. And then you can simply see that I use our measurement tool to get an entry, and then I can as well profit from that instant move to the downside. Okay, so once the market came around here, you can simply see it created some sort of reaction, kind of reactions around here, anticipating that the market could possibly push to the upside. So once you scale down to an intraday, let me select to the 30 minutes or to the 1 hour, you can see this could possibly indicate W formation, possibly indicate a W formation around here. And then I can as well take a trade around here, but I'm going to be a bit patient since I'm using the 4-hour time frame for this example. So what happens, you can simply see that the market again pushed to the upside, and then meaning that the market has already created a level around here. Okay, the market has already created a level around here, and upon creating a level around here, we anticipate that maybe in the future, that maybe the markets could possibly come and visit this level. So what happens around here, you can simply see that the market pushed to the upside, okay, and bounced off because of this level which was already established. Okay, it's why you can simply see that there is some sort of bouncing off. Let me first get rid of this. Let's get rid of this as well. So the market pushed again because it's our resistance level. Again, it pushed. Actually, this was an impulsive move that you're seeing around here. Then it pushed down. Then it also came back. Okay, it came back on our level. Okay, once it came back, you can simply see that there is some kind of rejections around here. So what does it mean for the rejection? So once it gives us a confirmation candle, and since it's on the resistance level, then that's where I'm going to bring my measurement tool, put my stop loss above the range, and then that's where the market could possibly come to this point. Yeah, at this point, we're dealing with a ranging market. Whenever you happen to come to the market where the market is creating this visiting and then bouncing off and then bouncing off, then just know we are dealing with a ranging market. So the market finally came around here, and you can simply see that again we're having rejecting candles around here and then giving us a confirmation candle of the bulls. So this is where I'm going to bring my measurement tool, my stop loss below the range, and anticipate that the market could possibly be heading to the upside. Okay, so going to that, and then at this moment, what happens since the market pushed to the upside? At this moment, I'm going to be using my fib tool, and then I'm going to be plotting it around here, and then push it at the top around here. So how do we use these measurement tools? You can simply see that the market came at this level, okay, and then it finally pushed to the downside. That is at the 60% retracement area, and then creating some sort of double bottoms around here. So once it creates double bottoms around here, so you can simply see these are the double bottoms I'm talking about. Okay, so what does it interpret for us as traders? We interpret that the market could possibly be pushing to the upside, or there is a likely push to the upside, and that's it. Then upon pushing to the upside, again the market has created some sort of reactions around here, but let's see why is it creating reactions around here. Okay, oops. we don't have extra information. Yeah, perhaps maybe we shall just ask our trusted broker excellence to add us some years. Yeah, or maybe very soon I'm going to be using TradingView. But I'm a very much fan of web trader. I like using the web trader. Yeah. So at this moment, you can simply see that there is a glitch. That actually there is reactions around here. Let me do like this. Create some reactions around here, and then it pushed to the downside. So once it pushes to the downside, what does it mean for us as traders? So the market is going to be creating series. So you can simply see the market is creating series of lower highs and lower lows, lower highs and lower lows. So this is where we come as traders, and then plot a level, and then we have been given candlestick corrections around here, and this indicates that the market is going to be pushing to the downside, since we're now in a downtrend. And then I'll just bring my tool, put my stop loss above the range, and then anticipate the market is going to be pushing to the downside. Okay, so at this moment the market has already created a series of highs and rather created a series of lower highs and lower lows. So it pushed to this point, and then again, you want to investigate why it pushed to the downside. Since it's pushed to the downside, what comes for us as traders? Let's see. We're just going to be patient again and still wait to see what the market could possibly do. And this, we shall move from here to here. Okay, so once it comes around here, we want to see how can I get entries around there. Then let's first see. Again, we can as well plot our fib extensions around here. You can as well put it here, okay, and push to this point. So it's from, let me first erase this a bit. So it's from this moment. It's from this point to this point, and then to this point. You can simply see it came at a 70% retracement area, creating some sort of a glitch around here. So this is where we are going to come and get our intraday trade, and then anticipate that the market could again still pushing to the downside. So upon pushing to the downside, you can simply see that the market has already established a level around here, since it was coming from this point. It came from up again, creating series of lower lows, lower highs, lower lows, lower highs, and then here we are. So what do we do as traders here? Again, we are going to be plotting our support, rather our support around here. So like we create our support, okay, but how do we get entry? Still, how do we profit from this market, since this is our first step? So what we're going to do here is we can as well still use a fib tool. Wow, as well use a fib tool. So that means from this point, okay, to this point. Okay, so from that point, then this is where we're going. Oops. Let's go first. Let's go back. Okay, from that point, this is where again we're going to be. This is where, let me first stop this. Set from here to this point, then to this point, then to this point. So at this moment, what do we see? You can simply see that the market is at the 6% retracement. It topped a bit in the 7% and 6%. Then at this point, it's creating some sort of head and shoulder pattern around here. And then what does that mean? Since it's giving us entries, since giving us entries, we need to see why 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 do we say that they are entries? We are having, first of all, we're on our fib levels, and at the same time we having bearish candles reacting around here, putting our stop loss above the range and anticipating that the market could give us a likely push. Still, we can as well use a trend line around here, guys. We can as well use a trend line around here from this point. That means this becomes our point. This becomes our point A. Let me get this point A. Okay, and this becomes our point B. And this becomes our point C. So that's what we call a third touch rule. So it's giving us vibes of the third touch rule, and it's possibly the reason why we also had to short it to this point. So since like we also still to the downside, again the market is giving us some head and shoulder pattern. I don't know whether you guys can see it, but maybe in my next video I will be talking about some sort of patterns. So it's giving us some head and shoulder patterns, and once you see this pattern, that indicates that there is a likely push to the downside, rather to the upside, since we are on our resistance level. So at this point, okay, we've got some beautiful triggers at the resistance, rather the support level, and then stop loss below the range, and then we anticipate there is a likely push to the upside. So basically, guys, this is what I have for you on Euro US dollar. So what do we, so I still have some time, so what do we have for, let me give you another example on maybe the GJ. Let's go to the GJ. Let's go to the GJ. Let's first go to the GBP JPY. GBP JPY is also another currency pair that is easier to trade. So it's better for you guys to reflect on these pairs, and maybe you can get a one or two out of it. Some of the pairs I recommend for most traders to trade. The BPJPY is a bit easier for us to interpret. Yeah. So coming again on this market, you can simply see that this market was in an uptrend. It was an uptrend for long, and then I think let's start from here. Let's start from here. Okay, let's start from here, guys. So since the market was creating series of higher highs and higher lows, okay, so at this time it's giving us double tops. And what does that mean for us as traders? You can simply put you plot your resistance level around here, then you come and short this market, since we've been given a bearish candle around here, and then we anticipate a likely push to the downside. So guys, you can basically see how I'm just using different key levels, different tools for us to get entries. So still at this point, I just have to plot my support level around here. Then the market played around here, and then this means I have to come and put my stop loss below the range. Why am I putting my stop loss below the range? First of all, it's giving me double bottoms, and then giving me a green candle or a bullish candle here, and then I put my stop loss below the range and anticipate a likely push to the upside. Okay, so at this moment, again, still we got another visit around here. So here you can simply use still a fib extension or a fib tool, and then you can simply see that the market came from this point, came to this point, and then giving us, beautiful tweezers. Where you see a green candle and a red candle, those are called tweezers. I'll as well, make a video, concerning about candlesticks. Yeah, beginner friendly. So still, we put our stop loss below the range, and then anticipate that the market is going to be pushing to the downside. So at this moment, still, you can still plot our trend line around here, and then we can as well say this is our point A, this is our point B, and this is our point C, making it 3 touches, and then waiting for reactions on this point 3. You can simply see that it's giving us, again, bearish candle around here. So this is where we are like, okay, yeah, there's again a likely push to the downside, and then anticipate that the market could possibly be pushing to the downside. So basically, guys, this is what I got for you, and if you found value in the video, please don't forget to subscribe to my YouTube channel, The Wiz Trader. Okay, and you can as well use my broker Excellence. Yeah, Excellence is a very good broker. Gives you instant withdrawals. That's why I like it so much. Tight spreads, everything is just top notch. And yeah, don't forget to give me a like, guys, and comment down below, guys. Yeah, comment down below. Let's grow a very beautiful family on this space of YouTube. Yes, thanks for watching my video. See you guys.